Hello everyone, my name is Kapil Shah and you are watching Quick Market Analysis by Philan Academy. So in this week, market is down by near to the 1%. On a daily chart, if we see from past 8 trading sessions, market is under the range of 2 to 2.50 points. So on the higher side, we keep on continuously hitting the resistance near about by 18,880 level, and on the lower side, this is what base that we are seeing, and the week has ended on exactly at the support level. But there is a kind of a weakness is there is a selling pressure red candles that we are able to observe over there. If I look at the intraday chart as well, so here we will get a little bit more clarity. Okay, this is what the last time, one time, two time, three time, this last trading sessions has settled near about by this level. So this is what remained support level. But once this support level is sticking out, so as of now, market is under the range. It is at a lower end. But once the 18,650 level is getting breached, then there can be a little bit more selling pressure. And then the next best support level that we have is in between level 18,550 level, that is in water first support level. And then the very important short-term base that we can see is around the 18,450 level. So 18,450 level, it has resistance earlier, it has acted as support level, and this is what an inception point of rally. So from the very short-term trading perspective, 18,450 is an important support level. Once we are sliding below this level, then we can see that there is a little bit more pain up to 18,100 level kind of thing, but that is in a later story. But as of now, below the 18,650, we have the weakness up to 80,550, which is in a minute support level, and the short-term stiff support level that we see around the 18,450 level. On the higher side, we have the resistance level near about by this particular point, 18,750 or 18,770 level, because on the multiple number of times this particular level has acted as a resistance. So this is what 18,770 is the next best resistance level for the market. And on the high side, from past 5 trading sessions, the 18,880 level was acting as an resistance. So this is what the next best resistance. So this is the based on the horizontal lines, we have just tried to understand that okay, what are the important levels for coming weeks, and once we see the drop below these particular levels, so what are the levels that is on the card. Secondly, if I look at the bank nifty as well, so bank nifty is also under the tight consolidation patch. We are seeing a little bit intra-sector rotation as well. Earlier, ICICI Bank, Axis Bank used to do well, and HDFC Bank was not doing well, so it was not taking anywhere to the bank nifty. Nowadays, we are seeing that HDFC Bank has started to pick up its momentum, but we are seeing some shorts of around the profit booking in a Axis Bank and ICICI Bank. So again, the market is under the bank nifty is under the state Q prudence, but it is at a lower band, and it has a broader range, 43,400 on the lower side and 44,400. So that is a 1,000 point range for the bank nifty. From past more than the 30 trading sessions nifty is operating in. Either side breakout will detect the further trend. 18,400, 43,400 level is an immediate support level. Once that support level is taken out, then we can understand a little bit more pain up to 42,700 level, which is what a previous basis that we are able to see over here. From a sector rotation perspective, if we see, so in this market, in this particular week, only one sector, that is in financial services sectors, has ended on the positive side, that is in a 0.3%, followed by the nifty services 0.03, and the nifty IT was very negligibly negative. Pharma sectors in previous 2 trading sessions, when the market was under the cusp of the strong selling pressure, so in the pharma sectors we were finding some sorts of traction, so that is a good strength that we are able to see in. Who are the negative stocks? So media, metals, oil and gas, these 3 sectors from a longer time we are seeing that this is under the pressure, and it continued to be so. Realty space, FMCG, they were not under the negative momentum, but a fresh round of profit booking that we have seen. But media, metal and oil and gas is persistently having the weakness. Now coming to the last part of this particular video, stock of the week. So here we are seeing that the pharma sector has started to find a good tractions, and here I have made a one particular chart that is of the Dr. Reddy, and there is a very good cycle that we are able to observe, and this cycle I am observing from year 1999, so almost 23 years back. So what happened, or what is the cycle that we are able to see is over here, strong bull candle. So that is a precursor of it is setting the further positive tone for the stock in a coming time. So whenever the strong bull candle that has it has created, we are seeing that okay, 1, 2, 3, and 4 years stock prices has went up. There afterwards 5 years there was no any kind of price momentum, or we can say that this is what the time based correction that we have seen. Again we have seen the strong bull candle. After the strong bull candle we have seen the 5 years rally on the high side, 5 years corrections again. So this is what the similar patch that we are having. And in the year 2020 we have seen the strong bull candle again. Prices has little bit retraced to the middle point of exponential range candle, and in this particular year uh, stock is starting to pick up its momentum. So I believe that okay, 1.5 to 2.5 years is going to be a very good period for the Dr. Reddy, as the duration is quite high, so it will be in positional to the investment kind of the setup. But in a market weakness, overall market texture is quite positive. But whenever we see some sorts of declining momentum, so there are certain kind of pharma stocks that we can accumulate, because for 2 years, after the 2 years underperformance, they have started to pick up its momentum, and they can have the good time in a next 1 to 2 years kind of. So that is from the bullish side sector. Secondly, we are seeing that the metal stock is not doing that much well. So within the metal stocks, I was looking at an Hindalco stock. So in the Hindalco stock, this week the stock is down by near to the 4.5%. This is already the breach of a rising was that we already observed. Prices has come down, it picked up its momentum. On the daily chart, if we see that whatever the upside momentum had happened, so prices stalled at its distribution patch earlier, and from that particular point we are seeing that okay, prices has broken this particular falling trend line as well. So overall sector negative momentum. Stock is also reacting from the higher band resistance levels. On the daily chart we are seeing the bearish continuation sign, so that is what a negative development that we can see. So the intraday chart we are seeing that what is the immediate support level that we have, resistance level. So this is what the resistance level 414 level that we are having. So this is what the support level. Now that support level is broken, so it will become the resistance level. So prices below the 415 level or above the 450 level we can consider is as a short term negation of our bearish view. So 415 415 will be the first stop out case we can say. And on the lower side, as far as the targets are concerned, so this is what the first target that we see, so that is in 400 level, and below than that this is what the next best support level around in this range that we see, so that is a 390 level kind of thing. So Dr. Reddy on the positive side we can have a view, and Hindalco on the bearish side we can have a view. So whatever the discussions in this video that we did, that is for the educational purpose only. Thank you so much.